Welcome along today, everybody, to the ETF Spotlight Review. First up, I'd just like to say thank you to my subscribers. Thank you for supporting me. For those who haven't subscribed, don't be afraid to smash the subscribe button and also jingle the bell. Today we'll be looking at another ETF here that I think is actually quite interesting for everybody. This is HACK. This is BetaShares Global Cybersecurity ETF. In this world, we're all working from home, shopping online, and there's that Internet of Things where everything is going to be integrated. Cars will talk to other cars. There's just going to be a lot more data out there. Everyone's going to be online. We want to make sure we protect our identities in our data. Pretty much your data is the new black gold. It's worth billions to companies, and it's worth billions to hackers, and it's worth billions to those people who like to do nefarious things. So it's very important that we actually are protecting our data, and data protection is going to become a massive part of the industry, huge part of the new tech super cycle. So it's definitely going to be a part of the fourth industrial revolution. So this is definitely something we all need to have our radar tuned up on, and actually be looking for opportunities, whether you want to choose individual stocks or you want to go ahead and invest in an ETF like HACK. Stick around, because we'll just try to enlighten everyone as best we can. Well, hello there, Investorholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. Okay, let's have a look at a few of the basics of the fund. So HACK aims to track the performance of the NASDAQ Consumer Technology Association Cybersecurity Index. That's a damn mouthful. Provides simple and transparent exposure to the leading companies in the global cybersecurity sector. Why are we bothering with this? I kind of touched on a little bit before, but let's have a look at some of the more in-depth reasons. So it's a simple and cost-effective way to access a diversified portfolio of the world's global leading cybersecurity companies. So as with all ETFs, with a single trade, investors can get exposure to a diversified portfolio of cybersecurities from a range of global locations, as you'll see, mainly in the US, because that's where all the big tech companies seem to be at this point in time. So the fund aims to track the performance of the index, and there's no active manager fees because it tracks the index. Pretty cheap. We'll look at the cost in a second. Invest in the global giants and emerging leaders. Strategy to invest in both existing marquee names as well as the emerging players in the cybersecurity industry. So you've got all the big boys, and they dominate the index, but it's the smaller guys you want to have exposure to that are coming up. Companies who've never even heard of that'll eventually come into the index and quite possibly knock all those other guys out in the near future. Scoot up. Okay, let's look at some of the numbers. We had a net asset value yesterday of $8.41, trading just below that, $8.40. Management fees, not too bad for this one, 0.67%. Distribution is semi-annual. You see some money in your account in June and July. And because we've had a bit of a crash now because of COVID-19, the dividend yield has increased quite a bit. You're looking at roughly 9%, but I don't think that'll last very long. The share market, as we all know, is creeping up quite rapidly. So if you are that way inclined to look at this one, it's probably worth looking at it sooner rather than later, and take a position in this one if you're interested in this sector. So data pervades our society, and a reliance on it is only keeps increasing. So securing that information has become a necessary and large industry. So the ASX lacks any major cybersecurity players. So I reckon that's where Hack steps in to fill the breach for Australian investors. So, in my opinion, Hack is a solid option to give you access to some of the world's largest cybersecurity businesses, such as Palo Alto, Splunk, Fortinet, Cisco, and Raytheon. Oh, geez, Raytheon do a lot of things. They also do ballistic missiles. So there you go. So over the long term, this ETF could provide market-beating earnings and growth compared to the rest of the market. So I think this is one of the sectors to definitely be looking at. If you're interested in alternatives to this one, because we want to be doing some research and making sure we're making the right investment for our particular situation or our particular interest at the time, have a look at RBZT or Robo as well. So they look at more robotics and that type of automation type space. And also have a look at Asia. That's got some cool looking little tech companies in there as well. So this is definitely an ETF that I think has some real merit. And if you're have an interest in tech, cybersecurity, into computers and whatnot, I think that this might actually be an interesting ETF for you to explore. So pretty good performance, looking at the returns, so that's after fees. So since inception, which was 30th August 2016, you've done 16.7%, which is pretty good. That's per annum, so that's going to compound on you quite rapidly. Definitely a good investment for if you're putting together a portfolio of a half a dozen ETFs. This will give you good exposure to some technology companies. So we're looking at CrowdStrike, Palo Alto, Splunk, Cisco, Broadcom, Zscaler, Okta, Fortinet, VMware, and Akamai Technologies. Haven't really heard of a lot of those, but definitely heard of like Okta, Zscaler, Cisco, Broadcom, Palo Alto, CrowdStrike, Splunk. So there's a few sort of bigger companies there and more common names. But definitely something who in the past has performed quite well, and I don't see why the next 5 to 10 years they really change. With our economy changing so rapidly, especially everyone in lockdown, that I think has accelerated people changing over to working from home, doing more shopping online, those type of things. So definitely there's going to be a huge demand for these companies, and there's definitely a space to watch, definitely a huge part of that next industrial revolution. AI, robotics, pretty much everything's going to be integrated. So this is definitely a good space to be having a good hard look at. Put a small portion of your portfolio, an ETF portfolio, into this one. I think it'd be a reasonable play for the next 5 to 10 years. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.